morning, everybody. My name is Fausto You are back here at the podcast, the Cyber Trader Podcast. And I have a really good friend of mine, really excited for the first time on the show. We have Price Headley. And I know Price, I can't believe Price. It's been probably, 25 years now we've been doing
25
this stuff?
years, exactly.
25 years, something
Absolutely.
like that.
It's
And
great
it's
to be
just been
with
a
you.
it's been a long time. And, I know Price for all these times going back and doing these traders expos, which some of you have been at sometimes. And we've been on a panel a lot, and just love to be on the show and everything else. But so Price, what have you been up to? You look great.
Oh, you too. Great to be here. Just, glad that summer's here. My 9-year-old out of school, so keeping her busy, with lots of summer activities, good pool time, tennis, golf, all that good stuff. Thankfully, she loves all that stuff. So it's fun because I do too. So we're just enjoying the start of summer, even though it's not officially summer. I think when school ends, it's basically the start of summer.
You know what? I'm still waiting for summer. The weather has been sucking in New York. I mean, you hear like April showers bring May flowers. It's been raining from April, May, June. It's rained every day. Weeks have been shot. It's just been a disaster. But it's been fun. It's been fun in the market. We had some crazy volatility. I'd love to hear your feedback on that. We're going to talk a little about that stuff. I've been doing it for a while. But how's everything going in the market? What you've been doing? Have you seen anything different that's been going on? And listen, I've been freaking out about a lot of these things. New president came in. The guys, every time he talks, it's like you never believe these politicians, but they really do. This guy actually does what he does. You've seen all the stuff that's going on with Tesla and everything. Stocks. Is anything that you've been focusing on a little bit more differently?
Obviously with our president's tendency to throw a lot of news out, a lot of threats out, basically the whole art of the deal playbook, which is make big threats, make bold moves, and then end up negotiating something back down. That's basically what's happening with all the tariff talk. But as you said, Fausto, it's made a lot of investors nervous. And I think that's what's fueled this rally that we've had off of the April lows, is that people are worried about what's the next bomb to drop from our president. And yet now every time that you get the EU talk about a 50% tariff, you got to talk about Apple getting punished for moving production to India. And then the stock market just bounced right back. So that's what we always talk about. I know you know this too, Fausto. It's like how the market behaves to news is often more telling than the news itself. Right? How and the market is rallying in the face of this bad news, in the face of this worry, in the face of we're all thinking, hey, what's next? What's the next bad news to hit? And if the market keeps going up, that's bullish, right? It's not so bullish when you hear good stuff or this should be okay, and the stock starts dropping. That's when I get worried. And we did have that really kind of definitely surprise people with that April 2nd. Liberation Day, as it was called. It was certainly no financial liberation for anybody, right? Unless you were short.
Crashing
But
day,
basically, yeah, right. But basically, I mean, it's. I think we're in a market that's pretty good, but still may see some chop because we're testing the highs now. We're back to the S&P 6,000 level. We're back into now volatility, which, the VIX, I follow the CBOE volatility index. For those that don't follow that, you should, because it tracks fear. And right now it's a lack of fear. We're seeing a VIX under 17 when it was at 60. So we've had a massive, probably the quickest drop in volatility from a fear spike that I can recall in my 35 years of options trading and stock trading is when you see that kind of fear drop, it's basically telling you that everybody's worried. Nobody's worried right now. And that's probably when you should have a little bit of healthy fear and a little bit of don't be surprised when maybe we do get a little bomb drop from our president or whatever else. Hopefully no real ones drop. But the reality is, there's a lot of things happening geopolitically. And so we've got to stay nimble and also somewhat hedged, right? You don't want to be all in back on the bull case and chasing too late. So, and protect yourselves always, folks. You got to know to where your stops are, where you admit you're wrong. And that's where probably my biggest mistakes in trading have happened, Fausto, is when I wasn't willing to admit I was wrong. And the market will punish you, as we all know, harder than any. The market is the ultimate honesty barometer. How honest are you in your plan? If you're not honest with yourself about where you're going to admit you're wrong, it will punish you to where you finally just say, no more, I can't take it anymore. And it'll punish you worse than if you just admitted it in the first place and taking the small loss. Always the best plans. It's hard for a lot of traders to do, because I think what happens, Fausto, is that people get sucked into this story mode on stocks.
Yeah.
If you buy Apple, you think, I got to own Apple forever. Guess what? Apple's been underperforming for months. It's not
a year.
It's not where you want to be right now, right? And it may come back eventually, but right now it's got all the worries about tariffs and China and India and all this stuff and Trump attacking it. don't be there, right? As a trader, your biggest asset is flexibility. You've got to stay flexible. You cannot get fixed. You cannot get dug in the heels, and you definitely can't get like an ostrich with your head in the sand. You've got to go ahead and say, look, I'm going to cut and run. Maybe I can come back to play another day, but right now I'm going to admit I'm wrong. And what I find is that I'm usually right longer than I expect, and I'm usually wrong longer than I expect. Like it's like if I thought something was going to bounce and I'm down, it usually doesn't bounce, at least not what I had hoped. And that's because everybody else is feeling the same thing. And everybody else is looking for that next bounce to get the heck out. And the market a lot of times does not give you that chance. And the other thing too is you cannot get stuck in realizing like I made 10%, I should be happy. Well, if something else went up 30%, 50%, 100%, you're leaving serious opportunity on the table for hoping for that bounce in a dog and a laggard and a non-performer. So I just cut and run, just clean those off and say, let's start fresh. And there's nothing like starting fresh and getting an unbiased perspective, because it's amazing, isn't it, also how biased we get when we're in a trade and start thinking that we know better. But then you get out and all of a sudden you get like just sort of like you can wipe the slate clean and get a fresh
It's like a
start.
relief. Yeah.
Yeah, it's a relief, and it's just like a whole new perspective that you get. Whereas when you're locked into that trade, it's like you're stuck in your own personal hell sometimes of like, why am I still in this? Oh, because I think it's going to be good because I'm believing this story that I've been told that I've drummed up in my own head or that the markets have
Well, they
drummed
want to
into
take a
our heads.
loss. They just don't
Right,
want to take
and
a
of
loss.
course, ultimately it's all about emotions, isn't it? And managing your emotions, the fear, the greed, the wanting to be a winner, the game, and sometimes you have to be willing to take the small loss to set up for being around for the bigger winners. And because if you don't take the small loss and you get eaten alive, especially if you make the criminal number one sin, which is over committing your capital into any one trade, right? You get too heavy on a trade, now you almost have locked yourself into that hope mode, to that, gosh, I hope it turns around. Hope is not a strategy. It's usually the slope of hope is a deadly one. You ride it down until you finally just can't take it anymore at a much worse loss. So we've all been there. And it's one of those, I think that's in my 35 years of trading. If I was going to attribute my longevity to anything, it's basically going to admit that I was wrong, because I made those early mistakes of just holding and hoping. And options, you definitely cannot, you don't get that luxury, right? If you're using any kind of
No.
leverage, if you use futures, if you use anything, that leverage just compounds the pain. It compounds the agony. It compounds the damage financially, and like we said, psychologically, right? A big part of this whole game is psychologically protecting your internal capital. How I feel about not just myself, but about my methodology. Like, do I believe in what I'm doing? If you overtrade, if you overcommit, if you make those classic mistakes, you're not going to believe. You're gonna get chopped up. You're gonna get beat up, and you're gonna say, that doesn't work. Throw in the trash can like everything else. You got to start trusting one core pattern, one core thing that you can repeat again and again. So I'd rather see people get good at one thing than try to be a jack of all trades and a master of none, right? So it's like we teach very specific patterns of big trends of where the trend is starting to take off and how you ride it, how you trail your stop, how you get the heck out of it and never fall in love with it, right? Say, okay, this thing broke. I got to follow my rules. I'm out. I'm done. Wait till the next win, lose, or draw.
Well, that's why, that's why I wanted to have you on here, Price, because your whole methodology. I mean, we met so many times, and unfortunately, we only get a chance to meet when we do these events and we do these speakings. And I think we all agree in the same thing. Like one of the biggest things I teach is more of like, and you do the same thing. Like I love the way how you do things. So like, it's not about the winners; it's about controlling the losers. You know what I mean? You got to learn how to lose first before you can win. Because if everybody wins, nobody would need any help. It's like it's like why. After you, it's like when you're on the 17 diet, you want to do diet the right way. This is how you're supposed to do it. You got to you keep going McDonald's, someone's got to tell you the way it is. But yeah, I mean, I'm glad you brought that up. And that is a big issue. And like you mentioned also, there's a lot of people in here that are listening in and they're going to be watching this, and this is going to be recorded for everybody to watch, that they think like they got to be a jack of all trades. You know what I mean? They get caught up on the crypto. They get caught up on the options. They get caught up on the day trading. And when they don't think something works, they just leave. You know what I mean? Like you got to find something that you really like, and you got to find a good mentor. You know what I mean? And not only the mentor, you got to find a good group of people you could trade with, because you can't be there all the day. It's like you're the doctor, like, well, you're not also the nurse. You're not also the psychologist and the PM, whatever they call them. All those, so it is very important. It comes to it. I think you got to learn that, and that's why you've been around for a long time. Like a lot of people don't realize. Like I think the way you really learn more than anything is that when you get involved in a big catastrophe, if it's the financial crisis, if it was, I mean, everyone's probably been here, with COVID. You've been around as long as I have been with even with the .com. When you go through that, if you could survive that, you could do well. So what is the
Yes.
biggest failure rate that you've seen that traders mistake? Like you train, how many people you've trained? Thousands, right? Tens of
Oh,
thousands over
tens
the
of
years?
thousands. Sure,
Tens of
exactly. So
thousands,
you
right?
it's that initial overconfidence is because you alluded to it, Fausto, when you've been through those other difficult times. I call it scar tissue. Some of that scar tissue, we think that's a bad thing. That's a good thing, and kind of reminding you to stay even keel. Don't get too high or too low jumping around. Say, okay, I've got to be even keel. I've got to take my losses. The gains will come, but it's just about following that methodology and not getting too high or too low. So it's really that plays to one of my strengths, with just that ability to be patient and believe in yourself, but also not say, I'm not going to swing for the fences on my capital allocation. This any one trade should never make or break you. Right. That's how most people, they want that get rich quick on the very next trade. Right. Everybody wants that. And that's actually not what you really want. You
No, you don't.
need you need that consistency. And I've told there's one big right off the gates. I said that's not necessarily the best thing that could happen to you, because you think I should have quit my day job a lot sooner, right? I should have put even more money in, because you always think, if you're that kind of trader that thinks, well, when you're right, I wish I had more. When you're wrong, I wish I had less. It's like you
Right,
can't
right,
think
right,
like
right.
that. There's no perfection in the markets. So I always say is that it's not like a Texas Hold'em poker game where you ever go all in. It's more like many shades of gray. There's no black and white. You're gonna have to trade just very steadily and consistently. And this is about building that belief in yourself, right? So if you have that belief in yourself, that that's different from saying I have belief in myself that I'm God and that I'm going to create the magical gains out of a dog situation, right? That's not what you're going to do. Your goal is to execute. Your first and most important job is to execute. So that means execute what? So you've got to have a plan. You've got to have a system. You've got to have a method to make sense out of that. What seems like madness and chaos on a day-to-day basis is say it's actually not. If you look back at just about any major move that's happened up or down, there's a structure to it. And the big boys, whether in Wall Street or anything else in the world, are watching this stuff and saying, look, this is something where structurally this is a downtrend. I'm going to make money on this downtrend by setting up bearish strategies. I'm going to wait for my right retest point, my re-entry point, to define a low risk entry. That's a big part of what we teach at Big Trends, is how do you get back on the horse when you got left at the station, when you got left on that first breakout move. You don't chase that breakout. You wait for the right retracement point, and then you say, okay, this should be the next spot where it should hold. If it doesn't hold, I get that out quick, take the small loss. If it does hold, I make a great next second leg of trends. A lot of second leg of trend kind of moves also, where I might miss that first one and not beat myself up over it. I've done that before, beat myself up for missing something. That that
Yeah, tell
that
me, like,
pays you
tell
no
me what your
that
biggest
pays you
loss
no
was.
dividends. What's
We've
that?
all we all we've all learned from our like we always
Sure.
have like that old girlfriend that like destroyed our life. You know what I mean? And like, what was like your biggest lesson you've learned? And also the biggest opportunity you probably screwed up on. I mean, listen, we've all been there. We've done it.
Yes.
There are more people going out of this business and trading more that are in the business of trading. And I always tell everybody, like you just mentioned, like before, and not to change the subject, but like there are points in time where you've gone all in. You cite blackjack, you got two aces. You know what I mean?
Right.
Like,
Right.
what are we supposed
You're
to do?
still
Just,
you're still only
just
80
hit?
or 81. You have pocket aces, you're only 80 or 81% to win, right? So
Yeah,
you
right.
learn that
So
that still means if you go all in, you will blow up 1 out of 5 times, right? So the idea is, yeah, we want to limit that risk of ruin a lot better than 20% of the time you're gone. That's too high. But yeah, like you said, Fausto, my early mistakes were I went through a great educational environment and was a graduate from Duke University in the late '80s, and frankly thought I knew it all, right? And frankly thought, well, if I work harder than everybody else, because that's what our schooling teaches us in our school system here. It's what your careers and whatever job you are, folks. We know that you advance because you're right a lot, because you work hard, you're right, you make good decisions, and then basically you're like, okay, that's how I got promoted. That's how I grew my business. That's how I rose the corporate ladder, whatever it is. So all that training that we have to be right all the time, you come into
uh-huh.
trade, you're like, I want to be right all the time because that's what's worked for me in school. It's worked for me in my prior career.
Absolutely.
being right all the time will not happen in the stock market. It just won't. And
Yeah.
so I don't care if you read all these things that tell you, oh, I've got a 90+% win rate or on, way out of the money credit spreads or whatever. It's like, well, when you're wrong, then you get blown up. People that sell naked options, there's been brilliant Wall Street geniuses who made a fortune and then lost all of it back. Whether you look at long-term capital management that precipitated one of the prior financial crises or whatever else. It's like all these brainiacs still can blow themselves up because their strategy is most of the time right, but when it's wrong, it's
Get
just
screwed.
death. It's death,
You're out of
right? They
business.
shut down the fund because they're not gonna come back from that drawdown. So, but as you said before, like managing your losses, controlling your drawdown, allowing you to stay in the game is such a big part of it. But yeah, I've gotten sucked into the hype, sucked into the next story stock or story sector or whatever. Even these quantum stocks that recently ran, the quantum sector was big late last year, right around the Trump election, right?
It
So if you
crashed.
look at quantum stocks, they all crashed 50% or more, right? Some of them are coming back, but yet a lot of them are not even anywhere close to the buy that they were for me in the first leg up in the September, October, November, December. But even on a few of those, whether it's like SoundCloud, IonQ, QUBT, I was too late getting out on some of those and locking down profits. I should have locked down profits earlier. And so, and what happens, Fausto, is what I recommend, especially from an option traders, but even the stock traders, is I'm a huge fan of anything that you can double, sell half of it. And why do I say that? Because if you're making money, let's say I've got like Apple and it doubles and it goes on to be a 10 bagger or whatever over the past couple decades, true. But if you sold half of it and then you keep the other half, you're still pretty darn happy. If you sold half of it and it tanks back down to break even, you
Break
still made
even.
50%. And especially when
Yeah.
you're dealing with the fast moving world of options like we do, selling half of the double, it just is such a psychological freer up or of giving yourself a chance to let the rest run. And so we've actually come up with what we call hybrid strategies, Fausto, where what we do is now we'll even sell stuff faster than a double on half. We'll sell 2/3 out at 50% gain. That still works out to be a free trade. If you run some cool math, it's like you could sell 80% of your position, 80% of your position. Say I had 5 contracts, I sold 4 of my contracts, 80% of my position at only a 25% profit in option. That could happen in minutes. And you say, okay, and now that one last runner, we had a trade on Apple, I think it was last year, where basically we sold 80% of it, just a 25% gain, and the other one contract went to like a 2,000% gain. It's one of those things that's not going to happen that often, right? But the
No,
idea is
it's the
like,
right place, the right time.
we wouldn't have hung on for a 2,000% gain because you would say, oh, I'll take the triple, I'll take the 200%, or I'll take the 300%. And so by having the free trade and just saying, let's let it run, let's just see what happens on some of these, and you'll be amazed at how letting it run, once you don't let it run without getting your risk capital off. Once you get your risk capital back, letting it run is a great strategy, especially for options traders. And it's about the only time, Fausto, that I will actually take an earnings trade with options is if I've already sold out my risk capital piece. If I already have my money back into our clients' accounts to say we can free roll on the rest, whether it's one contract or whether it's multiples, it's saying you get your risk capital back, then you can take a shot. We did it with Palantir, and we lost on that last tiny piece, but we still made about 70% composite on the trade because we
Don't
sold
even
part
don't
at
even bring up
100.
Palantir. I mean,
We,
like
we
I
sold part.
bought
Well,
that,
this
I
is what I'm
sold
saying.
that.
We sold part at 100%, part at 200%. The last piece, the last contract lost 73%, and yet that was because it tanked on earnings this last time. But yet we'd
Yeah.
already taken out all of our risk capital, and we even had profit on the trade. And the last piece was just a salvage piece, and we still averaged out that 70% gain. So the beauty of that is that by doing it in pieces and parts rather than all or nothing, it frees you up to really create a whole lot of different outcomes for yourself to see where a trade can go.
Now, let me ask you 2 things that people probably here want to know more about. I know that you're not jack of all trades, you're very options. So 2 questions I have for you. Number 1, what is the easiest, simplest way for someone to learn how to trade an option that's learning? And number 2, what is the dumbest, you know, biggest failure rate that people are out there pushing that will lose trading options that puts them out of business?
Yeah. So, I mean, the easiest way is, first of all, concentrate on just one security, right? So, and what we would say is like focus on something like the QQQs, the NASDAQ 100, because that's 100 key NASDAQ names like Apple, like NVIDIA, like Microsoft, and more, all the big Magnificent Seven and more. But it's just one thing you've got to focus on. So, narrowing your focus in, putting the blinders on, as we talk about the horse analogy, you don't see all that other noise that's going on outside of that. You focus on what's right in front of you with just one action point, one symbol. Quit worrying about scanning across hundreds of names, and then just take a simple, like we'll just buy a simple option strategy where we'll buy one afternoon and we'll sell it the next day or the following day at maximum. We won't hold it more than 2 days. So you can't be
Why 2
getting
days? Do
stung.
you have an
Well,
expiration
in that
date
one,
or a
because we
week
don't.
or a month?
Yeah, we're actually on that one only going out 3 days, right? So we're pretty aggressive on that strategy, but basically it's something where if you're starting, probably go out about a month, right? Give yourself some time. But we're just looking for a quick move over a couple of days without it being a day trade, without ever having to sweat that stuff. So even small accounts can take advantage of it regularly. But it's one of those where it's just a system. We call it's just a QQQ options buying system. But
So that's the first thing you
so
teach somebody. Like if somebody actually
that's
want to
a
like,
yeah, something either on the SPY or the Qs. I'd do one of those two vehicles. The Qs would probably give you a little more bang for your buck, but SPY is solid as well. That's the S&P 500. So both of those come at a very diversified security, very liquid, very active. They have daily expirations. You can customize your option strategy to just about anything you would ever want to do, buying or selling or both. We do a lot of both, like where we'll buy one option, sell another option against it, reduce your risk, but still never be naked, never be unhedged. But then you mentioned on the other side of the fence, and we actually did set up, by the way, I think a QQQ free report for your viewers here, so you can check that link out to take advantage of that. But the other thing where people make the most mistakes is buying the super cheap, like 10-cent options, looking for something that could go up thousands of percent, and they blow up so many times that they just cannot stick with it. They're looking for cheapies. They're looking for just, I call it the dreamers. The dreamer
yeah,
trade is rarely going to pay off. If it does, then you get greedy. Then you do it again and again to where you get all that money sucked back out, and you end up taking a winner and a profit into a loss, because it's just not sustainable. There's too many of those situations that are just hopes and dreams. And so what you need to
they
focus
buy
on
like
is
the cheaper ones and they try to like they're not liquid enough. The spread's a lot bigger. Is that the reason why and everything else?
Exactly. Yes. Yes. So, and you never want to play a game where it's just you against a market maker. It's not that market makers are inherently bad or evil. It's that they are looking at risk. I know market makers that went out of business during the late 90s tech internet boom because they were selling other average Joes like way out of the money options, saying that'll never happen. And then these things went vertical and market makers went out of business. And so what they
Wow.
did to address that is they went and they created these really wide spreads. You mentioned it where the option's worth 5 cents and they're like, sure, I'll sell it to you for half a dollar. And it's like, they were selling way overpriced options to people because people are like, well, they didn't know any better, right? So now I think the average trader has become more educated, more aware that, yeah, you don't want to way overpay for something, but still, I would recommend not doing a low probability game like that where you're going to have a hard time sticking with it psychologically. Like, it's just, I'd rather see, I don't expect that you're going to get 90% win rates. I'm happy with 50% win rates. If you can win twice as much as you lose, that can be a very profitable system. A lot of people just assume it's all about win percentage. And that's probably one of the biggest misunderstandings, because there's something called the R multiple. And I'm sure you're aware of this, Fausto. It's like the idea that if I was risking $100 on a trade, well, if you're only making $100, that's only a 1-to-1 a risk reward one. That'd be an
Right.
R of 1. But if you tell me that I can risk 100 and make 1,000 and have a 10 R multiple, then even if the win rate was 20% or 30%, I could still make that work. Of course, we want it to be higher. But the idea is that if you got a 50%, you got a 2R, twice the reward for your risk. You can say, okay, make 1,000, lose 500, make 1,000, lose 500. Do that, rinse and repeat. It's like flipping a coin, but saying every time you won $200 instead of losing $100 when you lost. It's like, well, it's got a 50% rate of winning. Well, then if I can win bigger when I'm right, lose smaller when I'm wrong, that can be a very successful approach. So there's a lot of ways to skin the cat, as I said, but the idea is that you need to find something that fits your personality. Some people are more able to handle risk, but also I would say most every trader that comes into big trends, they think they can take more risks than they actually psychologically can, right? When the rubber meets the
Hmm.
road, we tend to default them to say, okay, if you think you're at the highest risk category, shift down a notch. Like I always tell people, like, if you think you can buy the at the money option, buy the one strike in the money option. If you think that you can buy 2 weeks at a time, buy a month at a time. You think you can buy a month at a time, buy 2 months at a time. Give yourself more cushion, more wiggle room, especially when you're getting started, because you have to look at it as a long. If you're going to be in the game for the long haul, look at it as a learning journey. Like Fausto, you said earlier, learn how to take losses. Learn how, if you take small losses, that's part of the early learning tuition that you pay to build your confidence, build your system, build your intestinal fortitude that I can do this and stick with it and not just get bashed and then give up, right? There's too many people out there doing things and then giving up because they just took stabs at stuff and didn't really have a plan of action on how to take money out of the markets ultimately by losing smaller and winning bigger.
Yeah, and by the way, if anybody wants to get that link, whatever, on the top right-hand corner and right there, just take your phone, scan that QR code, and you'll be able to get that workshop. We'll be able to get that over to you with, with Price. So, like I said, just click on that link, bring your phone out, and you have it on the right-hand corner, top right above Price's head. I always try to tell everyone, like you just said, it's part of education, right? You have to trade, and I always tell everybody, want to learn how to trade options? Buy one options and see what happens. You know what I mean?
Mm-hmm.
And just sell it. And then you learn pretty quickly. You know what I mean? Like, don't sit there and analyzing, start picking the indicators and this and that. Just buy it. Like, even like when I trade my traders, like people, like they're like a deer in the headlights. They get really nervous. I'm like, how many trades did today? Oh, I didn't buy anything. You know what? Buy one share of it. They're like, what's that going to accomplish?
Mm-hmm.
Because you have to know what it's like to get into a position. You're not buying something because you're afraid to lose. And if you're afraid to lose, you're not going to know how to take losses when you are losing. And that's where it comes to trading. So now, regarding about all your years of trading, like, what do you really recommend people to stay away from? Like, as in trading goes in your style, like, where do you see a lot of people failing in trading? And that you have to because we teach more, not that, like, I teach people, I tell everyone, if you come to me, I'm going to teach you. I'm not going to teach you how to make money. I'm going to teach you how to stop losing it. So what is your whole motto behind that whole thing?
Well, we would tend to first on the top tier of the big names, the names right? So if you start trading names that you don't know or that the rest of the market doesn't know, then you're going to be dealing with that you against a market maker situation. It's going to be a wider spread. It's going to be basically just not how you want to trade. You want to trade against the rest of the market participants. And then the question is defining your edge, knowing what your edge is and exactly when the conditions are right. So this is where, Fausto, you've seen me say, I don't want to be trading every day, right? There are times where I will not trade because it could be risk that we've got headline risk of kind of news item that we're waiting for the next tariff pronouncement or whatever, right? But we're right now going through that with negotiations with China, right? So we'll see how that shakes out as they continue their talks. But the idea is that I'm going to be very selective. And so by being selective, that builds my confidence that I'm being a good observer of market conditions first. And then when the conditions are right, then I strike. Then my subscribers know to strike. So the idea is that you're not going to overtrade yourself into then burnout or into like revenge trading. I think I just lost, I got to get back. All those like classic psychological mistakes that traders, especially newer traders, are prone to make. It's saying, how many great trades do you need to make your year? I once saw John Henry at an investment conference. He's the guy who then bought the Red Sox with a consortium of people, won the World Series finally for the Red Sox, right? But he said that in his hedge fund, if they have 3 great trades a year, it's a monster year. If they have 2 great trades a year, it's a really good year. If they have 1 good trade a year, it's not that great of a year. And I was like, isn't that an eye opener? We're sitting here thinking like, how many trades can we make today? How many hundreds of trades are we going to make in a month? How many thousands of trades are you going to make in a year? And you got a guy like John Henry who bought the Red Sox for $600 million or whatever, and it's probably worth multi-billions or whatever, saying he doesn't need a whole lot of trades to make a lot of money. What does that tell you? It tells you that if he identifies a big trend, which is what my theme has always been, that he will figure out how to get the most out of it, right? He's not in it for a day trade. He's going to max those big trend ideas out for multiple days, weeks, or months, right? Those guys that deal with like currencies, those are very liquid markets, right? Compared to even the options markets on the SPY and the Qs. But the idea is that we don't need a lot of those great big ideas to have a great month, quarter, or year. You just need to be focused on where those setups are. Because what'll happen, Fausto, I don't know if you've had this experience, but I have, is like when I said, oh, the market's going choppy, I'm going to go into a choppy trading range mode. I'm going to buy dips and I'm going to sell bounces, and it's working. And then you sell a bounce and it rips to the upside and you get back a big chunk of your profits that you made catching the little, as my Tom Dorsey would say, picking up the nickels and dimes in front of the bulldozer, right? I then got ran over by the bulldozer on the tail end of that move, right? It's like that idea.
It just takes that one thing to flip a switch and just tanks on you, and just takes it all away.
I've done a lot of math on those kind of situations, and it's like, you've heard of the 80-20 rule, Pareto's principle, where like you can be right 80% of the time, and then those other 20% of the time can rip your face off. And then you're saying, okay, well, if I get 20% of the type of setups that actually turn into 80% of my profit opportunities, that's the difference. That's the aha light bulb moment for me 25 years ago, at least, when I launched Big Trends back in 99, was that the idea like, okay, let's show people how to get onto that. Minority of the situations, at least on paper, they're the minority, but actually they happen a lot more than you would expect. We've seen, and people, I was criticized when I first launched Big Trends, Fausto. They said, you're just trading the bubble. Because back then, of course, when I launched in 99, we're talking about internet, we're talking about those. I said, guess what? The bubble will continue to form somewhere else. The money will keep rotating into, and you've seen it countless times where it rotated away from tech into housing. Remember the housing bubble? You say, well, all these things eventually into bad lit, but guess what? There was tons of money to be made while the bubbles were getting blown up, oftentimes over years. These bubbles don't blow up over a day or a week or even a month. They blow up over long periods of time. So if you're saying AI could be defined as the blowing up of a bubble, right? It could be our next internet bubble. The question is it ready to pop, or do we have a lot more upside? And the way these stocks are acting is that they still to have a lot of upside when you go across not just the specific Mag 7 names, which took a pause, frankly, but you see the comeback in NVIDIA recently. You see the comeback in some of these quantum stocks, and then you're seeing like these power generation stocks now really rocking and rolling, like a Camco.
Nuclear stocks. I did a big video.
Yeah, nuclear, right? Stocks. Exactly. They're red hot, right? So it's like, so you go, so as a trader and an investor, you need to follow where the money's going, because we have to face it. You and I, Fausto, do not drive the markets. The institutions drive the markets, and so the institution money is what we want to track and say, okay, where's the big flow happening? And if it keeps flowing that direction, who are we to say that it's going to stop anytime soon? I kind of go with it until you see it start to really stop flowing into those names. So we're basically trend followers. I'm always assuming somebody knows more than I do, but my job is just to identify the pattern and get a piece of that move, right? I don't have to get all of it. And the easiest part of a move and the easiest part of a big trend for me, Fausto, is the middle third of the trend. It's like, don't get in the habit of trying to pick tops or pick bottoms. Just ride the middle wave of that trend. When it ends, you get out. It may make one more attempted move. A lot of those attempted moves are fast moves or fake outs, and they don't necessarily keep following through. But the idea is that we'll catch that sweet spot in the middle. It's a lot easier to trade that. And so that's what we're always looking for, up and down.
Well, Mark, what industries do you like that you're seeing that's making some big moves right now? Anything that attracts? I mean, we're talking about AI right now. Listen, when we were just before I got on, I jumped on this stock and I sold it too damn cheap, ARAI, and I ended up buying it back. It was another IPO that did a really nice run. But what are you seeing as in industries that you like moving forward? I mean, other than everyone's trying to catch the bottom of Tesla and this chaos. I mean, that's a different trend. You know what I mean?
That's a whole different story, right? The must trade is definitely different. Although I can't recall any CEO, especially one as successful as Musk, to have been vilified as much as he has. So it's an interesting contrarian trade, perhaps, if you say, look, he's the Edison of our generation, and we even have a service that just trades Tesla options because it moves so well up and down.
Yeah, everybody loves that.
But back to the trends, like you said, AI is still working, so you got to get a piece of that. We've also been big fans of the gold trade. Years ago, like people said, gold is dead. Bitcoin is where all the future inflation hedging is going to be. It's not going to be in gold. That couldn't have been more wrong, right? And so the gold's been ripping to the upside. The gold stocks, whether you look at like a Wheaton Precious Metals, an AEM, Agnicoma Eagle,
gold's
or any of those kind of names.
I own some gold.
I mean, the reality is, it's kind of like, is our government going to stop spending money? No. They're the big, beautiful bill that's being talked about, it's going to jack our deficits up another several $billion. Guess what gold is? It's basically money printing kind of world that we live in. It's not just the U.S.; it's around the world, right? So I think that demand is still there. I still see that we could go up another 20% just even in the next year on the GLD, which is the vehicle we track to trade gold, or the big gold stocks are even more leveraged to that.
What
So
about silver, though? I mean, because a
silver's
lot
been
of people,
picking
I'm
up here
shocked.
recently.
I own
It
a lot of
was
silver, and silver really didn't make a big move like gold did, though.
Well, here's the thing about silver is it's got more economic uses, so it's a little bit more economically sensitive than gold. Gold's more just like the inflation play. But silver, if you see the economic numbers stay strong, I think that silver still has a case to be made for. A lot of people were projecting that it was going to be recessionary with the tariffs, right? And if the tariffs are just talk and then we go back to only a 10% or so tariff across the board, which that looks like that may be the case other than China, if that's just talk, silver's got a long way to go to the upside, and it can even catch up quite a bit. So I still like silver as well. SLV is the vehicle that we trade for silver, and you've got
Yeah, the
several
ETF on it.
silver-focused stocks there. So, but bottom line is that the market's in a rotational type environment within the major stock sectors. You've seen healthcare really underperform recently. That will come back. It's just kind of lagged here recently, but I still think healthcare is a relatively good long-term sector. But I'm not really trading it in the short term because the charts aren't any good. So we wait for the classic chart technique of all, Fausto, that still works to this day is the 200-day moving average. If you try to buy anything under a 200-day moving average, you're spitting in the wind. I don't care if you're right eventually, that it eventually comes back. You've got too much time that you waste. Every time I've thought I know better, and even if some of my other indicators say it's long-term opportunity and I buy it under the 200-day, I end up just stuck. I end up waiting and waiting and waiting. And so that opportunity cost is so critical for folks to remember. Even if you're flat, if other things are going up 10, 20, 30, 50%, you cannot afford to just get left behind with other leaders moving. So focus on the leaders, don't focus on the laggards. That's another big theme. Don't buy dogs, you'll get up with the fleas. Right. So the idea is that buy leaders, stick with the gold A plus stocks, the top 20% that shouldn't be as this was the case of Microsoft in the 90s. I only got a part of that move and kicked myself later looking back at it. But Microsoft was a great case where it's like it was one of the stocks that stayed perpetually overbought for the entire decade until the Department of Justice came after them at the end of the 90s. And it was like when something stays overbought, guess what, Fausto? It's not necessarily a bad thing. If somebody's buying it, especially institutions, they're usually buying it for a reason. They're buying it because they know that it's got a big tailwind, a long-term trend, the right sector, the right area to be in. Microsoft was, of course, one of the dominant winners of the 90s, and I only got part of that move and kicked myself by kicking ourselves, right? When I kick myself, I go back and study it. Why did I get out? Why did I? Oh, I thought, well, you can't go broke taking a profit. Take some money off the table. Don't be greedy. Well, it's like, well, Bill Gates was, the new era
Price,
leader of our
there's so many
generation.
stocks out there. I mean, listen.
Yeah, there's so many, but it was a belief also. It was a
Yeah.
belief in my head to say this thing's too overbought. We're all trained that the word overbought is bad. So if I say overbought, you're like, sell it. Every textbook I've read says overbought means it's probably going down, right? Or at least it's going to chop around and go nowhere, right? While it works off the overbought condition. Well, overbought says that somebody's buying it. In this case, if it keeps staying overbought, they keep buying it, it keeps pushing to new highs. It's not stalled out at the top of a range. It keeps on getting new high, new high, new high. NVIDIA was that way a couple years ago. Apple was that way a decade ago. They just keep getting bought and
probably
bought.
there
And guess
right
what?
now.
Yeah, Palantir is kind of the new age Apple, NVIDIA of the day. Exactly. So Palantir is definitely there, and you see them go over to Saudi Arabia with their hands out, saying, "Yeah, thanks. We like being a part of this additional business. There's plenty of new business to come. It looks like for all those big tech names for sure."
Yeah, same thing with Boeing. Boeing, the same thing. You know what I mean? Like,
It's
and
it's a good comeback. Yeah.
It's a great comeback. And I think everyone, and one of the things I think everyone here has to understand and listening in is that us being, mentors all our lives and love teaching, we love passing that knowledge over to everybody else because, it's bad for the industry seeing people fail, and everyone thinks like, we just to let everybody know, and that's why I love having Price on, and I want him here, and we've done so many events together. Is that it's not good for the industry to see people fail, and they get caught up, and they fall in love with these companies and everything. You'll notice, on our show, and it's funny, like you're no different than most people. We mainly like to talk about losers more than anything because I think it's a lot more educational. Because, like, listen, if you're doing great, you wouldn't be here in the first place, right? I mean, that's really, if you're healthy, you're not going to, you're not going to the gym because you're in great shape. You're going. I mean, obviously, you want to keep that shape going. So it's the same thing just going to the doctor. You know what I mean? Like, you don't go to the doctor because you're in great health, other than get a checkup. You're there because you're not doing well. So, there are industries you guys got to be careful of that we're watching, and when they die, you got to move on. You got to move on. There's always going to be something that's going on. So getting back to what you like, do you still like the AI stocks?
I do. I mean, like we said, the nuclear theme is
The
working
nuclear?
now. So to go with that, so obviously the quantum stocks are, while they're not quite set up where I would like them like they were last fall, watching them for the next phase. If they keep going, obviously we'll get a piece of that.
The
But
only thing
the
I'm
idea
nervous
is that
about them, the only thing I'm nervous about them is like they're projecting where they're going to be 10, 20 years from now. You know what I
right,
mean? Like, even like the nuclear stocks right now, like they're
right,
doing great. They're doing,
yeah,
OKLO.
they're
What
not
else is the
making
other
money
one?
yet. Right.
Not making
They're
any money right now.
they've got to build out in a number of these
SGN.
cases, right? I mean, Meta just did that deal with Constellation where they already have the capacity, right? So it's interesting to see just how the everybody's watching these trends and where the money is likely to go. But yes, you do have to be flexible, and you do have to be willing to endure some volatility, right? So there can be some volatility on some of these charts where a stock could be down 20% and still not break down on my read of things, right? So typically when it breaks more than about 25 or 30%, it's probably breaking the core indicators enough to say, let's take a little pause. But you still have to have enough wiggle room to not get shaken out. And so what we remind people too is like a lot of our stops that we'll use Fausto are like end of day stops. So like saying if a key level breaks at the end of a given bar, not on an intra bar little fake out, because there's a ton of fake outs. And
Yeah,
so you got
always
to
are.
know also always how to say, where's your uncle point without necessarily getting just left on the sidelines while it rips back up with you left behind, right? So we do a lot of what we call closing stops, waiting for the end of an hour or a day or a week or a month, whatever your time frame is. You can use that closing stop concept, and by the time it breaks at the end of that bar, you say, okay, I'm done. I gave it a chance. It didn't bounce back. So get rid of it. But a lot of those will bounce back and save you the pain of getting flushed on that intraday noise.
So any last words of wisdom you want to give before we close out and everyone get ready to watch this a little bit later and jump into the market?
Well, like you, Fausto, I've been trading for a long time, 3.5 decades, and I never want to think I've got it all figured out. I always want to green grow, keep learning, keep adding the little tweaks or little additional things, and looking for other new opportunities. Right. So it's a constant search process, right? Even when you've got things that are working, you never assume that you figured it all out. You stay humble. You never get too high. You never get too low. So just always be managing your internal state. Always be green and growing and looking for new information, new edges, new opportunities. And I think it keeps you fresh that way rather than getting stale, thinking that you got it all figured out and then getting left behind or caught by surprise once other new trends have developed. So thank you for having me, Fausto. It's always a pleasure to see you be able to share these insights that we've gained over decades of experience.
Well, love, we got to have you back, and it's always been great with you, and it's always been fun. It's always been education. I listen as a trader to another trader. I always learn whenever I listen some to you, which is great. So everyone, make sure you register for his event that's coming up. Also, you got the QR code in the top right hand corner. We're gonna have him back at the Cyber Expo. It's coming up in 2 months, so we'll see you all then. We will have these recordings set up for you. We'll make some nice little highlights, some shorts for everyone to enjoy it, and then we'll be back here tomorrow for another episode of Cyber Traders. Thank you very much, Price. And I will be in touch for the next derby with you because I lost to Belmont. I got totally screwed on that one.
Can't wait. It's always fun. We'll have to go soon.
Absolutely. Thanks, everybody, listening. I'll talk to you soon, Price.
Take care.